Hey, how's it going? My name is Luke Stokes. I am witnesslukestokes.mhth. And today I want to talk about, should Steem dollars be a pegged asset? And if so, when should we peg it? So this is a complicated topic, and I'm doing this both in video format and text format. So if it looks like I'm reading, it's because I am. And I'll try to get through it. It's gonna be, I'll just say up front, this is a discussion that most people are probably not willing to really, truly, appropriately put in the work to effectively understand completely. Like it's a complicated topic, and most people probably just don't even care. So if that's you, and you're okay with trusting the witnesses that you elect to make a good decision on your behalf, don't bother reading any further. Don't watch any further. We've got you back. You're good. We'll take care of you. If you do want to be informed and you want an educated understanding of Steem dollars and what value they bring to the Steem ecosystem, please strap yourself in and read on or listen. This isn't going to be a short conversation. It will not be summarized. It can't be summarized to make it easy, because we have to really think about first principles and read all the relevant source materials to inform our understanding. If we take shortcuts in this case, we're talking about we might not be respecting the impacts of our decisions on a $50 million market in Steem dollars or a $1.6 billion market in Steem. So we gotta be careful about this stuff. It matters. This is why there's so many passionate discussions going on right now. So in any complicated discussion, again, it's important that we start with definitions and first principles as much as possible. So what's a Steem dollar? To figure that out, I go to the white paper, and we can start with page 9. So I'm just going to read some from the white paper here. So Steem dollar. Stability is an important feature of successful global economies. Without stability, individuals across the world could not have low cognitive costs while engaging in commerce and savings. That basically means it would just be too difficult having to figure out what the prices are all the time. Because stability is an important feature of successful economies, Steem dollars were designed as an attempt to bring stability in the world of cryptocurrency and to the individuals who use the Steem network. Steem dollars are created by a mechanism similar to convertible notes, which are often used to fund startups. In the startup world, convertible notes are short-term debt instruments that can be converted to ownership at a rate determined in the future, typically during a future funding round and that kind of thing. So a blockchain-based token could be viewed as ownership in the community. That's Steem. Whereas a convertible note, Steem dollars, can be viewed as a debt denominated in any other commodity or currency. In this case, it's Steem. The terms of convertible note allow the holder to convert to the backing token with a minimum notice at the fair market price of the token. Creating token convertible dollars enables blockchains to grow their network effect while maximizing the return for token holders. So you can read the white paper for more on that, but if we skip ahead a little, we'll see one example of an issue that may take some time to correct is the short-term market manipulation. Market manipulation is difficult and expensive to maintain for long periods of time. So what we have here is we have Steem dollars, which are convertible notes to Steem. And in my reading, the white paper seems to imply that speculators buying up the Steem dollar above $1 is market manipulation. And market manipulation, in the past, when this has happened, it's been relatively short-lived. Like the peg finds itself eventually. But the current one we're on has lasted a lot longer. So back to the white paper, Steem levels the playing field by requiring all conversion requests to be delayed for 3.5 days. This means that neither the traders nor the blockchain has any information advantage regarding the price at the time the conversion was executed. This is a good thing because it makes it difficult to manipulate. And to those who don't know, again, the Steem dollar is debt against $1 US worth of Steem. And there's a conversion function, which it's on the blockchain, where you can get that $1 worth of Steem from your Steem-backed dollars in 3.5 days. The Steemit.com interface recently removed that, obviously, because if the price of Steem dollars are above $1, that would be a bad thing to do. You would lose out on a bunch of value if you did that conversion. So a lot of the discussion about Steem dollars right now are whether we should implement a conversion that goes the opposite direction. Should we be able to take our Steem and convert it to an equivalent amount of Steem dollars at the $1 price? And so the interesting thing about that is the white paper actually covers it. It says minimizing abuse of conversions. If people could freely convert in both directions, then traders could take advantage of the blockchain conversion rates by trading large volumes without changing the price. Traders who see a massive run up in the price would convert to Steem dollars at a high price when it's most risky, and then convert back after the correction. The Steem protocol protects the community from this kind of abuse by only allowing people to convert from Steem dollars to Steem and not the other way around. Okay, so this concern to me is one of the main reasons why Steem dollars is not worth $1 today, with all that extra value put into the Steem instead. If we had this two-way conversion, fluctuations by the speculators in either direction would favor those who want stability. And it's worth noting the white paper isn't sacrosanct. So like, if we need to make changes here, we can. We've already done it before when we removed the liquidity rewards, and we've made other changes as well. So the main question I think we should be asking is, do we think the two-way conversion idea is a risk? And if it's not a risk and the white paper is wrong, then we can move forward with the idea of making a possible change. If it is a risk, we can just stop right there and we're done. We don't even have to move on. So back to the white paper. In effect, feed producers are entrusted with the responsibility of setting monetary policy for the purpose of maintaining a stable peg to the US dollar. This is an important point to reiterate. This is the job of witnesses. This is what we get paid to do. And many have argued in the past as witnesses, we weren't doing our jobs. As soon as the Steem dollar got manipulated up, some witnesses were implementing a feed bias, which I personally I didn't like that solution because I think it has other economic unintended consequences, and it impacts the blockchain in other ways that I won't get into right now. But the issue has been discussed on GitHub. There's actually issue number 1839 you can take a look at. If you, again, want to be fully informed, I'd highly recommend read all the comments there, and just recognize that this is a problem. If the witnesses aren't providing this peg, the blockchain doesn't function the way it's supposed to. So back to the white paper again. The primary concern of Steem feed producers, that's the price feed, is to maintain a stable one-to-one conversion between Steem and the US dollar, the Steem dollar and the US dollar. Anytime the Steem dollar is consistently trading above $1 USD, interest payments have to be stopped. In a market where 0% interest on debt still demands a premium, it is safe to say the market is willing to extend more credit than the debt the community is willing to take on. If this happens in Steem dollars, will be valued at more than $1, and there is little the community can do without charging negative interest rates. So that's, just to be clear, zero interest is already the case. We've already removed the interest as witnesses. I haven't heard anyone discussing negative interest rates. It's certainly not something I'm a fan of. I have no intention of supporting that. So I suggest we could just leave that off the table. We can go with the explanation that's here in the white paper and just kind of be like, hey, it's cool. The market's okay with increasing debt, and it'll just continue to increase until eventually, we find an equilibrium where there's just too much debt. And, then whether that's in weeks, months, or years, eventually we can just trust that Steem dollars will come down again until they hit that floor and people start converting them back to Steem. That's a possibility. It's certainly an option, and it's one that I think holders and speculators on Steem dollars would like to see, but it also might mean we miss out on some really big potential opportunities. And, and that directly relates to whether we as a community want a stable token. So to better understand the value of the potential we could have for a stable token, I think it'd be really good to go ahead and read this great post that Smooth brought to my attention, and it's an overview of stable coins by Miles Snyder. It's a really great way to explore all the different stable coin options right now, and I just want to read a little section from it. Stable coins are one of the highest convexity opportunities in crypto. They aim to become global fiat-free digital cash. So the total accessible addressable market, the TAM, is simply that of all money in the world, $90 trillion. The opportunity for stablecoins is intrinsically the largest possible TAM. This vision is larger than that of Bitcoin itself. The fiat-free currency that's price stable will challenge the legitimacy of weak governments around the world. That, I think, is awesome. Just that potential there. And here's another overview I enjoyed. It's Dangerous Volatility and Why We Need a Stable Cryptocurrency by Christopher Georgian, or however you say that. And one of the reasons this is being discussed right now, I think, this concept of stable tokens and whether or not we as a community should get involved in this game, is there's a lot of concerns over Tether and the USDT. Like, it requires trust in a third party, which we should all recognize is the problem with so much of the economy today. And cryptocurrencies and blockchains don't require that third party trust. So with Tether, someone's holding supposedly a US dollar, a real dollar that was converted and represented by this token. And we have no real way of knowing whether they're just printing Tether out of nothing. And so based on this incredible market cap, if there's some concerns with that and people want to leave that to something they can trust more, the market clearly values a pegged asset. And if you look at this image here, that's over $1.6 billion. If there was a chance the Steem ecosystem could capture even some of that value in a Steem to Steem back or Steem Dollar conversion, with a stable Steem Dollar, shouldn't we consider it? How much could that increase in the value of Steem as people buy it up to do that conversion? How much could the entire rewards pool go up as the value of Steem goes up? I think these are things we should consider. For some comparison, I'll also show the market cap of BitUSD and also Steem Dollars. And so somebody might argue, well, BitUSD is pretty stable, and if Tether runs into some trouble, it's going to enjoy all those new users. And that may be true, but I still want to think if the opportunity is big enough, should we give up even trying to get some of those users in our community as well, some of those investors, some of those people that want a stable cryptocurrency outside of just Tether. So here's my thinking on this right now. So number one, are pegged assets valuable? For me, based on everything we've explored so far, I'd say yes. The market greatly values a stable pegged asset. If more exchanges were to need a better, more trusted stability than Tether, Steem Dollar was an option, that could increase the number of exchanges that have Steem and Steem Dollars. And because they get one for free once they implement the other. So if they're going for the Steem Dollar, they get Steem for free. Not only that, they'll get smart media tokens in the future for free once they're already integrated with our blockchain. And whenever those SMTs, any of those become valuable and they want to trade them, they'll already be ready to do it. And we've already seen that with Ethereum ERC20 tokens. So that could be really valuable for us and getting more exchanges on board with what we're doing. So question 2, should the Steem Dollar be a pegged asset? And for me, well, it's like, yeah, that's what it's designed to be. It's a clear yes. I'd go so far as to say that the original design was poorly done because of the low market cap of both Steem Dollars and Steem. It prevented, a risk with that two-way conversion that we may not have today because of the higher market cap. Like it may not be a concern because there's, again, over $1 billion involved in this, and that's yet to be determined. So number 3, should we enforce the Steem Dollar peg in both the up and down directions? And to me, if we don't, then we're just kidding ourselves that we could even have a pegged asset. It has something that works on the downward direction when it goes below $1, but it doesn't have something on the upward direction. And it's just going to remain a speculative asset right along with Steem if we don't do that, in which case, what value is it bringing? Why do we even need it if it's just another speculative asset? So then number 4, and this one is important, should we enforce the Steem Dollar peg right now? This, I think, is the key question. This is the one that I think so many people are concerned and frustrated about. Many are really, really enjoying the high payouts they're getting with their high post rewards because of the inflated Steem Dollar price. But one thing I want to point out, and one thing most people may not realize, is that the high payout might more accurately be related to the rise in Steem price and not just inflated Steem Dollar price. So Smooth pointed this out in a conversation recently that Steem has gone up 46 times compared to Steem Dollar's 7x in the same time frame. And Steem Dollars had a couple spikes to 10x and 12x, but those were really brief. So that increased the total rewards pool by 46 times when Steem went up. Not just the portion of the rewards pool that's paid out in Steem Dollars. So I think that's really important to think about. That 46x was clearly more important than the 7x in Steem Dollars. So I want to make sure we're thinking long term when we think about this thing. One of the things I've often seen in the discussion is that the Steem Dollar growth is like the sole driver of user adoption recently. And that may be true, but I've yet to see like a really convincing fact-based argument that it's just that. Like most of them, they've been pointing out the correlation and not making the connect that it's like, it doesn't mean it's causation, right? It's possible the price of Steem and Steam-backed dollars, but maybe more so Steemed, were going up, potentially caused by it being, added to a green exchange, or, like that could actually be what's driving user adoption. Something that shouldn't be ignored is that, the Steem blockchain itself doesn't really function well when that Steem dollar peg is broken. And it's one of the reasons the internal market's all messed up. The prices there don't make any sense right now. It could also be leading to more scammers and people who are doing self-voting because that Steem dollar is inflated. So they're able to capitalize on that right now, which they maybe wouldn't as much normally. And so, bloggers love the high rewards, and they don't seem to care about the prices. The boom bust cycles of Steem dollar don't seem to be a problem as long as it's kind of just bonus. And, again, as long as the value of the Steem token underlying all the value here stays high. So, Steem dollar might go up and down, but as long as the Steem dollar, Steem backing it all is high, everybody's getting higher pay rewards, which is great. I think application developers are a little more frustrated because if they're relying on stable payments for their application, and they have like real world US dollar things they have to pay for, like servers and employees and stuff, well, they can't right now. And that's a concern as well. And then this is an important point I want to make that I really hope we hear as a community. I think users in countries with truly broken national currencies who are like desperate for any rewards that they can get from the system, like I think they should value and do value a stable peg because, they can't afford to speculate. They're not in a position to do that. If they get paid out, with like a $7 worth of Steem dollars and then it crashes to $3.50, that could be devastating for them. Conversely, if the price of Steem goes up because people are doing conversions and then instead they get 7 Steem dollars, each worth $1 a piece, well, there's some stability there that I think is really great. It just remains stable and they know they have $7. And I would really like more people to be discussing this and thinking about that when they talk about the value of a Steemed asset. If they want to speculate, Steem is there, but the Steem dollar pegged asset, I think the stability there is really important. And the last article I want to reference when we're talking about this topic is one that's really important to me. It's one of the first posts I ever read on Steemit, and it's written by Dan Larimer. It really got me the most excited about the potential for this platform. So please go ahead and give it a read. It's called Steemit's Evil Plan for Cryptocurrency World Domination. And I'll just quote a little section here. It says, "The real money isn't in blogging, content generation, or voting. The real money is found in bootstrapping a digital currency. A currency owned and operated in a decentralized way by ordinary people." That is the magic of a stable Steem dollar. That's what gets me so excited. This is, to me, is choosing long-term gains over short-term gains. This is a world-changing idea, and I want to make sure that the Steem blockchain supports it. I'm just so passionate about the ideas in this post and what they can mean, and they're made possible by eventually a stable asset. So does it need to happen right away? Like while the Steem dollar price is still high? Maybe not. Maybe we can let inflation run its course as it's doing now and have more and more debt printed with Steem dollars, and maybe we just apologize to the application developers. We just apologize to those who could really benefit from a stable daily currency that they can use outside of their national currency. And, maybe we should just apologize to the people who think we're missing a massive opportunity, as people might want to leave Tether and come to something else. Maybe we can wait. But I want to point out there's a risk there too, because there's a loss opportunity cost. BitUSD and others, they might explode in value while we just, in upward in market share while we just watch. It's also creating more debt, which could lead to future boom and bust cycles that end up wrecking not just the speculators, but also the everyday users who are relying on that value in a Steem dollar that may not be there, after it gets moved all around. Also, as the Steem dollar increases in value even more, implementing this peg in the future is going to get that much more difficult, obviously. So my conclusion, my current position on this as a witness, is that a working Steem dollar peg is very valuable to the Steem ecosystem, especially long term. The peg is currently broken, and I think we should explore and develop plans to fix it, such as a two-way conversion, as long as we're sufficiently convinced it doesn't introduce, systemic risk or more serious problems. and unless there's consensus, I don't think we should implement a change right now while the price of Steem dollars is abnormally high. That said, exploring options for keeping it from going higher might be worthwhile. For example, we could have a conversion, we could have code in there that allows for a conversion only when the Steem dollar goes above $10. For example, that would be a way to keep it below getting any worse in a way. And so that wouldn't impact anybody today if the price is lower than $10. I'm also in favor of developing and testing the code for a two-way conversion, but not implementing it until the price comes down further, maybe somewhere around less than $2. Or if the community as a whole just starts demanding it and they say, hey, we need a change, and we're only going to upvote the witnesses who really, support the peg, and we're going to unvote the witnesses who don't support a strong peg. If that starts happening, then I would say clearly the community has spoken. We should make this change. So those are my thoughts on it right now. I know this is a long video and there's a lot of content to go in here, but I've participated in hours and hours of discussions with witnesses and stakeholders and people, and I'm just continually impressed with how much people care about this stuff, how seriously they take this, and it just further convinces me that we're going to thrive, and that there are a lot of amazing people here who really have the best interests of the entire network and community in mind. So I'm also going to link to a bunch of other posts that I've read on this topic. If you have a post on this topic, or you know of a post on this topic I haven't mentioned, please link to it in the comments and I will edit this post and add it to it. And again, I just want to say thank you for everyone who's involved, who really cares about this stuff and really wants to make this place better. You're awesome. So let me know what you think in the comments, and until next time, talk to you later.